Let's talk dividend stocks, one of my favorite passive income vehicles, but I want to offer a warning to you because this is something where good news, very, very easy concept to understand. Bad news, if you forget this very easy concept, well, it's going to create a lot of frustration and unnecessary annoyance in your life. So I want to walk you through a couple documents that offer up exactly what I'm talking about. That way you can see more of a real world application of how this could look so that you're just aware of it. But again, don't be intimidated. Very, very simple, but very, very important thing to understand. So what we're looking at here is my tax reporting statement from my broker. And you can see right there that my qualified dividends for the year was $14,898.22. Okay, Clay, so you made right around $14,000. Kind of. What do I mean by that? And this is the very, very important part down here. Federal income tax withheld. 0. And this is the part where people can get tripped up because if you're working just a normal W-2 job, well, then your company is going to withhold taxes. So when you get your paycheck, you'll see all the taxes taken out. But the point being is those taxes have been taken out. Therefore, whatever you get, you can go out there and spend. But this is not the case here with dividend income. When you see 0 taxes withheld, that means that the $14,000 number that you saw previously, that's before any sort of taxes have been taken out. Meaning if I just go and spend all that money, come tax time, it's going to be very painful, very annoying because the IRS is going to be saying, hey, you made income, you made dividends, that's taxable income. You need to pay taxes on that amount. And if you spend it, yeah, that's not good. The same is also true for any sort of high yielding savings account. So here is a form I got from one of my savings accounts, and you can see I got $7,285.86. And that came out to right around $600 every month. But if I was going and spending that $600 every month, now all of a sudden at tax time, well, I've spent all that money. But none of that was withheld. There were no taxes withheld from it from the bank account, meaning I need to pay taxes on that number. So the learning lesson is this. Basic principle right here. Make sure that you don't spend every dime as soon as it comes in, whether it's from your dividends on your stocks or any sort of interest from your savings account. You need to figure out, well, how much money should I be setting aside? So you're going to want to talk to a professional.
Better call Saul.
Whether this is a tax attorney or an accountant, just somebody that understands what amount you should set aside. I'm not giving you any numbers because those laws are always changing. The amounts, it depends on what bracket you're in. So I'm not going to go down that weed I'm not going to get into those weeds other than just offer up the general idea that, yeah, generally speaking, you don't want to spend that money as fast as it comes in because you will ultimately need to spend or use some of that for taxes, and you'll have to pay taxes on it. And what that amount is, that's you're going to want to go and talk to a local tax professional because it's going to be different wherever you live, within the country. So that's the warning I want to just offer up. Be aware of this. Hopefully you already are, but if you're not, then I'm glad I could help you out because I'd hate for you to get in one of these situations where you're spending that money as fast as it comes in, and then you have a nasty surprise at tax season when your accountant or TurboTax or whatever you're using for your taxes says, hey, you owe this amount on that, section of money because none of that was ever withheld. And you're thinking, I already spent it and I don't want you to do that. So I hope that helps. If there's any questions or anything like that, leave any of those down in the comment section. But yes, good for you for creating this passive income. But remember, it is still income. It therefore is still tax, meaning you're going to need to set that money aside for when tax season comes. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.